All right, welcome back to this week's breakout watch list from August 21st to the 25th. In this video, I'll be covering the top 10 swing trading setups going into next week from the long side. Each of these stocks either have strong fundamentals, strong technicals, or volume clues that lead to uptrends. And I know the market hasn't been too hot lately. We're definitely in a low probability trading environment right now, which I'll cover a quick market overview before we get into today's setups. And like I said earlier, each of the setups today are from the long side, but if you want me to start mixing in short setups in future videos, let me know in the comments. Taking a look at my trading journal, you can see that the market isn't as strong as it used to be. NASDAQ, S&P 500, Dow Jones, the growth ETF, IWO, growth stocks, and RK, all under their 8, their 21, and their 50-day moving averages. The slope of those moving averages, at least the shorter terms, the 8, the 21s, are down. For really the risk on ETFs, the growth ETF, IWO, and RK, the 50 moving average is also sloping down, and we have no power trend. So right now, this is definitely a market where if I'm taking any trades to the long side, they're pilot positions, about 5%, maybe 10% max, and I'm not looking for any home runs right now. The market pressure is down. Now with that said, here are the 10 setups that we're going to be covering in today's video, which is sponsored by MarketSmith. MarketSmith is a trading research platform that we're going to be using to break down each of these setups. The first stock that we'll cover is APP. This is in computer software enterprises, the 27th strongest group out of 197 in the market, which is pretty surprising. Computer software, that is a theme that we're going to be covering in today's video. But the fact that this is holding up so well while the NASDAQ is under all the key moving averages is a nice sign. So going to price action, APP had earnings a couple weeks ago, up 467% year over year, even though sales were down 3%. After-tax profit margins improved by 11% year over year. And it's really the reaction to earnings that matters. This was up 26.5% on 717% the average daily volume, closing right near the high of the day while the indexes were starting to sell off. This continued to rally up into $40. I think the high of this rally, was $40 exactly. As this market pulls back, a low volume, lighter than average volume, pull back to the 8-day EMA. We bounce at that on Friday, have higher highs, and close up 1.1%, while the index is still closed down on the day. So great relative strength, great volume pattern in this one. A couple different ways to play this. If we get continued market pressure earlier on in the week, then we can use the high from Friday, 39.25, as a potential entry point. As this builds out, maybe a shakeout under the 8-day EMA, and then build this out later on the week, then we can use that lower pivot. Otherwise, just breaking through 40, it's not something I love to do while the market's under like the 8, the 21, the 50-day moving averages. Buying at very clean pivots tends to be a little challenging, but for this one, because it has the volume clues, because it has relative strength and the group strength, it's something that we could look for. But I would rather buy over Friday's high a little bit later on in the week if we get that market pressure early on. The next stock that we have is CCJ, and this is a uranium stock, so not tech stock. We don't have to worry about that. This is one that has started to respect the 50-day moving average on each of its pullbacks here. And what I really like about this is we had a gap down on earnings through the 8-day EMA and really pushed under the 21 EMA. So before earnings, this was wedging up higher, and then you could see like a really big rally, and then that gap down. That gap down, the fact that it undercut all of these lows, shakes out all of these late buyers, and then right after that, rallies back up, recaptures the 21 EMA, closes high in the daily range, and then we start to rally up again through 35, even though the indexes are coming down. Great relative strength, as you can see right here. Look at that relative strength line, now RS rating of 95. This is one where, again, I would much rather buy around the 8 and the 21 EMA where we can keep our risk really tight than buying at 35, that nice easy pivot, because the market's under pressure. So the 35 area I would use to maybe like finish off a position, but I'm really looking at getting in on a pullback to this $34 area. I like the action on Friday where we gap down under the lows, again, shake out those weaker hands, bounce right on the 21 EMA, close at the high of the day, up 2%. Again, relative strength because the indexes were basically flat on Friday. So that's how I'm going to attack CCJ. Back to the computer software theme, we have COUR, very similar to APP. This had a gap up on earnings. Earnings were actually negative, sales up 23% year over year. But again, it's the reaction to earnings that matters. This closes right at the high of the day, up 17.7% on 388% the average daily volume. Also closes above $15, which is a nice round number to manage risk against. It attempts to rally up. into the pivot here, but you could see our previous resistance here at 1673. Sellers still present, and you have a market in correction. It makes sense that this would pull back to the 8-day and then eventually the 21 EMA. But you can see so far we have respect for that 21. We had a nice shakeout on Wednesday, kind of higher highs, higher lows, good relative strength on Thursday. And then as the market bounced off that gap down on Friday, this closed right at the high of the day, up 1.8%. Great relative strength there. This is another one where I would much rather buy around 1533, managing my stop against the 21 EMA, $15, and a previous low in this pullback, 1501. But if the market's strong on the week, then we could just use Friday's high. 1585 is that potential entry point. Software theme continues with NTNX. This is a stock that's been pretty tough to trade historically for me. Tends to gap up, gap down, not really respect key moving averages or round numbers. So for me, I'll probably be using this as a risk gauge for the market. Like if this goes and we have power through this like $30 area or the $31 area, that's great. Probably will go without me, but that I can use that to build a little bit more confidence in the market. The other way to trade this, I do like that it bounced at the 50 and the 200-day moving average and then respected that 50-day moving average within a couple points of this pullback here. So one way to enter this would be right around $30. Like if we pull back in the market and this holds $30 on that pullback, enter in right around 30, manage our risk against the 21 EMA. That's 1% risk. You could get a little bit wider of a stop, 3%, 3.5%, get under the 50-day moving average in that case. I don't want to be buying this one at $31. I want to be getting in as close to those key moving averages as possible because we know like it shakes, it doesn't really respect the 21, so we shouldn't be expecting that to continue going forward for NTNX. Now, outside of software, there was one theme that was coming across all of my scans this week, and that was oil and gas / energy. So we're going to put Occidental Petroleum back on the watch list. I think this was on last week, if not last week, the week before. This is the one Warren Buffett has been buying, basically creating his own support here at 55.50. You can see once, twice, 3 times. This goes back to the HVC. If you look back at last year's graph, high volume close really kind of created this line of support there. What I like about this, we got over the 8, 21, 50-day moving averages in this launchpad setup on 7/11 this year. Rally into the 200-day moving average, initially fail there, but pick up buying support right around the 50-day and $60. You can see the low there, 60.03. Now we rally back above the key moving averages and pull back with the market, which is fine. But these last 3 days have been showing some good relative strength. You can see relative strength is right near this pivot, while the stock is much lower than the previous highs here. So with this, just using the highs from the last 3 days, 64.25 area, and then we can manage our risk actually below the 8-day, below the 21-day, and below the 50-day moving average, along with the lows of the pullback, all within just a couple percent. So when you can do that with a leading theme that has some key moving averages under that support level, great risk reward in this name, Occidental Petroleum. Now we go back to PSTG, and I know for a fact this was on the watch list last week. I think it's been on maybe 3 of the last 4, and it's back on this week. So why do I like this stock so much, even though it hasn't done anything recently? We go from 22 all the way up to $40 in a short period of time. Eventually does pull back as the indexes are pulling back, which is perfectly healthy after a nearly 100% move. But what it does here is it breaks the 50-day moving average and closes under it for a couple days. When stocks close under the 50-day moving average, a lot of swing traders will not have those stocks on their watch list because they'll have a requirement that the stock has to be above the 50-day moving average to get on their scan. Now, we get a gap up earlier last week and into that 50-day moving average. Typically, the first rally back up to the 50 fails, which you can see we pulled back on Thursday. We gapped down on Friday, but then rallied up 0.8%. We're getting very close to that 50-day moving average. And instead of buying above Thursday's high, where it's going to get back above the 50-day, people are going to start to take notice of a stock that's showing great relative strength while the indexes are in correction and above the 50-day, along with earnings in 11 days. I want to be getting in just below the 50-day so I can manage my risk a little bit tighter. So I'm looking for a break over Friday's high, call it $37 there, and then get our stop, maybe not below all of the lows, a little bit too wide, but in this 36 area, that's only 2%. So you could play this a couple different times before it gets too close to earnings, and then see if you can get a nice run into earnings for PSTG. Back to the oil and gas theme, we have SLB. This is one, again, that has been on the watch list for a while now. We had that shakeout under the 21 EMA, very strong close a couple weeks ago. Tight price action under $60, but as the market comes in, this gaps down under the 8-day EMA, shakes out the 21 on Friday as all the stocks kind of gap down, and then closes right near the high of the day, up 0.2% and into that 8-day EMA. So this is one, just a break over Friday's high could be your entry tactic, up 58.16, then manage your risk under the low of Friday. Again, I would probably look to Occidental. It's a little bit more liquid. We have the 50-day moving average, tighter risk, or the 200-day moving average to manage our risk against and keep that risk tight. While this is not as liquid of a name, I mean, it's pretty liquid. It trades 10 million shares a day. Like, you will not have any problem with it. But it does tend to kind of have these long lower wicks. So if you're using hard stops, which I do, you're more likely to be taken out of a name like this versus Occidental. Next, we go to a stock that's on my true market leaders list. This is Uber. While it's not in a super strong group right now, future estimates are increasing. This has been showing great relative strength, most recently kind of putting in that move under the 50-day moving average, rallying back up and chopping right alongside there. So as the indexes have been coming back down, this last week, Uber has been chopping sideways, which increases the relative strength right there. Nice action on Friday, getting back above the 50, above the 8-day after a shakeout, but that shakeout higher low than recently. So as the indexes put in a lower low, this is putting in a higher low, another sign of relative strength. This is one where you have the 21 EMA, you have that $45 pivot right around that same price. I would love the market to stay under pressure Monday, Tuesday, so this could build a couple more days under that area, and we can use either Friday's high or like Monday's high, Tuesday's high to get in a little bit before that $45 pivot, just because, again, clean pivots while the market's under pressure, that introduces liquidity that people could be using to sell into strength. I'm not saying that it will happen, but I would rather buy a little bit lower while the markets continue to be under pressure, so then I can manage my risk against the low of the pullback for Uber. We got two more stocks to cover today. This is Upwork. I believe this was on the breakout watch list earlier as well. Another one that had an earnings gap, earnings up 350%, sales up 7%, after-tax profit margins improving by 8% year over year. But the reaction is up 44% on 935% the average daily volume, closing at the high of the day. We do get an uppercut over 15, but eventually that market pressure is just too much. This is one that I actually did try to trade on this day as we undercut the low of the 8-day and the previous low, and then recaptured that. I bought in that area, but then I got shaken out on Friday as the low of that day got taken out. But very similar action. We take out that low, then we rally up, close near the high of the day, up 1%. This is a stock that's not doing anything wrong. It's just the market is under pressure. Yeah, the way I would play this is wait for another pullback, allow that 21 EMA to catch up, and then because this isn't a stock that's been in a monster uptrend already, I'm waiting for that 21 EMA so I can manage my risk against that. Because I've tried it once, got shaken out on a day like this, I assume the market's going to stay under pressure for a couple more weeks, or at least a couple more weeks until we get some really positive price action. So if I can be a little bit more patient now that I've taken one loss on this and wait for that 21 EMA to catch it. And the last stock that we'll cover is VRT. This is very similar to Upwork, had a nice earnings gap up, 29% on 600% the average daily volume. Actually does rally up over 35, but again, that market pressure is just too much. It's completely fine that this stock can't rally while the market's doing that. Pulls into the 8-day EMA, kind of builds out around this $35 area. Then we get two pretty harsh moves Wednesday and Thursday. This is another one that gapped down on Friday just to immediately reverse, start to rally up 3%, closing back above the 8-day EMA. This is probably the strongest stock in the market at this point. It's just how do you manage your position sizing? How do you manage your risk on a name that had a really, really wild move on Friday from the lows to the high there? But price action wise, relative strength wise, fundamental wise, this is doing everything that you want to keep track of. This kind of reminds me of ARLO earlier on after its second gap up. So this is one, if this can continue to pull back and kind of build out around that 21 EMA catching up, it's going to be a stock that's laser focused on my radar. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video, and I'll see you in the next one.